Welcome to today's trading session. Today is Tuesday, the 7th of January, and this is the first week where Sensex's expiry date has been moved from Friday to the Tuesday of the week. Today is the expiry, and let's see what trades we have taken today. Let's look at the orders. So, as we see, we took a new short triangle position today. Strike price is 79,800 CE, one lot we sold, and 76,400 PE. Put another lot we sold, and that was keeping in view where Sensex had started the day today morning around 78,000. It started, and within the first minute it went all the way to 78,200 300 mark. So we took our positions about 2% away from the last trading price at that time. And today, because it happens to be the first week where a lot of changes have happened, as we saw in the previous session, the lot size has increased, which means the margin requirement has increased. So we will not take more position today, any more position today, without properly watching what is happening in the market. Typically, what we see on the days of expiry are market opens up and then moves significantly through the day. Very big move it does. The market does many hundreds of points. It flips the direction of the move, right? For example, it kept going up in the first few minutes, then it will reverse the trend, and it will keep coming down by many hundreds of points from there onwards. So that is what we had earlier seen the market do. But because today is the first expiry day where things have changed, we don't know what is the change in the behavior of the market participants. We do not know if the older participants are still part of this expiry day trading at the same level they're participating today, or if new kinds of market participants have entered, or so their behaviors, their psychologies, we do not yet understand. Certainly things have changed in the market. Right, it's the first time where it has become a little bit difficult for retail traders to conduct their business. That's what it means, because the margin requirement is more, it's increased. So with that in mind, we will not take a blind position like long straddle. For long straddle to work, we need to see a good move, significant move on either side. But as we see what Sensex has been doing since today morning, so it has been trading in a very tight range. It's remained between 78,400 and approximately 78,000. So within 400 and 450 points. Within a short range, it has been trading for a very long period of time. So this kind of a move is actually suited for short positions, for short straddles. For example, if you enter a short straddle pretty early on in the day, within the first few minutes, or within the first half an hour, or within the first 15 minutes of the day start, then you would have seen a very significant decay in the premiums and you would have profited. And even if you did enter a straddle with a view that you would keep on performing adjustments as and when as the spot price would move towards the newer strike prices, you would have still made a decent profit, because trend is not something we're seeing even after the first 2 hours of the expiry day session. We're still not seeing a significant trend happening. It's a very tight range bound session. That is what we see today, and we wait and make note of things and take some lessons back and see how we can trade. If this what persists, right, we'll keep a watch on this coming Thursday as well. We'll enter a trade in Nifty also, and we'll see if the market is being a little cautious on the expiry day because of a lesser participation from a retail traders. So we're not saying that large moves coming. Then it may be worthwhile that you enter short straddles somewhere at the beginning of the day. And if you keep a decent target, some 20-30% profit margin target, then within the first hour or so, you're going to make the target. You've got to exit. You'll be able to exit the positions as well and make some good profits. But that's something that we will have to wait and see. We'll do that. At the same time, we will make use of the slightly higher premiums that we had at the start of the day on the expiry day. And VIX has just reduced through the day. It's reduced by almost 5% through the first 2 hours, which means that the premiums have decayed. Volatility has kind of reduced and the premiums have come down as well. And we are in a net profitable position for the newer trades that we took today. even for those positions. So if you see 76,400p and 79,800c, so we are in decent profits. We are in a really good profit for both of these strikes. And obviously, the positions which we carried from yesterday, they're already in profits. Let's watch through the day and see how the market goes from here onwards. All right, we're at the end of the day time. So it's 3:34 p.m. It's post trading session. Let's see what's happening in Sensex today. So this is a daily chart, and if you see in comparison to the past few days, today Sensex has been very flat, and I wouldn't be very surprised because it happens to be the first expiry with the new rules, changing the expiry date from Friday to Tuesday, an increased lot size, meaning increased margin requirements, and overall reduced retail participation. And we didn't see so much volatility today at all. In fact, once Sensex opened up on the positive side, it has pretty much remained within a very tight range in comparison to what happened over the past few days. And there was a significant decrease in the VIX index as well. Almost 6% the VIX fell, the volatility fell. And let's see our overall portfolio as of today, the expiry day, the Tuesday. We entered a couple of positions triangle today morning with the near strikes 79,800C and 76,400P. Those are in profit as well. So we have a combined profit of around 1,720, and we just subtract the total brokerage and taxes, it comes to close to about 100 rupee because the 4 legs is sold in total. So we are in net profit of about 1,600 rupee. And let's look at the margin requirement, how the margin stands as of now. There you go. The total used margin you see is 4.7 lakhs, and this is greater than the margin requirement we had at the previous Friday expiry, which was around 3.85 lakhs, if you remember. But that was with a total of 6 lots sold net. But today, in today's expiry, we have 4 lots we have actually sold. But in terms of units, it's 160 units, but this cost the lot size has increased, so the margin has increased as well. That's exactly what we had discussed earlier. And if you see, this translates to a total profit of 1,600 with account value of 1.9 lakhs on Monday yesterday, and total account value of 5.3 lakhs, which is slightly above the margin requirement today. Overall, it has been a total average 3.6 lakhs or something like that on a daily basis for 2 days in total, and what you are receiving is 1,600 after these 2 days. So you can clearly make out that the return on investment you're getting about 0.35%, which is not that bad for 2 days. This is just for 2 days, Monday and Tuesday being the Sensex expiry, and we still got another index to trade in tomorrow, Wednesday, and day after tomorrow, Thursday, is the expiry for Nifty. So it's not that difficult to make an overall return on investment of about 0.5%, half a percent or so on a weekly basis. Let's see how the rest of this week trends. Thanks for watching.